Elon Musk, who is the current richest man in the world, went into an agreement with Twitter to buy the company outright, meaning he'll pay a premium of $4.20 a share to buy Twitter. This was a 38% premium over what Twitter's share price was worth before it was revealed that Elon Musk had been buying up the company's stocks. You know what? He's not the first person to blow up a publicly traded company while believing they could run the company better and at the same time making a huge profit while doing so. In fact, there was a man named JP Morgan whose name is still used on banks all over the world. He was an American financier and an industrial organizer who bought and took control of various railroad companies by buying up their stocks during his day. By doing so, he became one of the world's most powerful railroad magnates, controlling about 5,000 miles, which is about 8,000 kilometers of American railroads by 1982. You might be wondering, how did Elon Musk get to pay for Twitter? Well, you've come to the right video. Stick around as I answer this question in a creative way. Also, be sure to watch to the end where I share the exact way Elon Musk was able to purchase Twitter without using his own money. On that note guys, let's dive right into this skit video. Thank you everyone, and welcome back to the show. Are you money smart? This is the most exciting personal finance game show on television today. Last week, we had 3 contestants who were asked 3 real questions for a chance to win up to $500. My bad.
You didn't say they were ice.
I got it wrong again. I meant $5 million. I'm your host, Vance, and today we have those same contestants on the show calling to win the $5 million prize. Just a quick recap on last week. We have Uncle Max, who's gained up to $1 million and is hawk but still away from claiming the $5 million ultimate prize. We have Steve, who's also raked up $100,000. Today, I got my lucky bow tie, so I'm gonna win today. And finally, we have Louis, who's not yet won anything. We shall see if he can redeem himself today. Yeah man, last week was a bleep, and the same deal with some bias in favor of Uncle Max. Well, I can assure you of no bias, and that it was your inability to answer the questions correct. I disagree, man. What's wrong with this guy? He seems to have a personal vendetta against me. Huh? What did you say? Nothing. Let's get started. Alright, now let's play the game. But before we get started, I'll go over the rules of the game one more time. I'll ask a question, and the fastest person to press the buzzer gets a chance to answer the question. And if it's correct, he wins the money allocated to that question. Now, if he doesn't get the answer, the second fastest person answers the question, and so on and so forth. Ready? Ready! Ready! Okay, the first question is for $100,000. This is a true or false question. When you purchase a stock, that means you're a partial owner of the company. True or false? Steve, you're the fastest to hit the buzzer. Can you tell us your answer? True. Stocks are shares of ownership in a publicly traded company. For a chance to win $100,000, Steve chooses B. Wow, you do have some smart people testing today.
Exactly.
So when you buy a company stock, you technically become a part owner of a company or business, although generally without the responsibility of the day-to-day running of that business. There are several rights and benefits that come with being a shareholder, whether you own one share or thousands. Now, the next question worth $500,000. Steve, what is a dividend? Is it A, the rate at which interest compounds? B, money paid by a company to its shareholders? C, the difference between what you bought an investment for and what you sold it for? D, the difference between simple interest and compound interest paid to shareholders? Steve, what is your answer? I choose A. For a chance to win $500,000, Steve chooses A. Oh, I can't believe this. The correct answer is B. A dividend is a periodic payout of earnings that some companies and funds share with investors just for being a shareholder. Companies generally pay dividends to encourage people to invest in companies. I got the next one. Damn it. Alright, here's the next question. What $100,000? Everyone ready? 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 How is a company's stock price determined? Is it A, the Federal Reserve, or B, supply and demand in the market, or C, New York Stock Exchange, or D, the company's board of directors? Louis, you were the fastest to hit the buzzer. Can you tell us your answer? Yeah man, I had to press the buzzer and answer the question even though I don't even know the answer. I get that. That's not how the game works. Either way, I get to participate. Well, since you were the first to press the buzzer, you need to choose your answer. I choose D. I'm pretty sure about this, man. Okay, let's see if the answer for how is a company's share price determined is D. Oh, well, Louis, you failed the question. The right answer is B. Stock exchanges like the New York Stock Exchange and the Nasdaq track supply and demand, which helps determine the price at which securities trade. Yo man, what is it with you and your computer cheating me? That answer is correct, but you switched it just to mess with me. I don't know what you're talking about. You're a sore loser.
Jesus!
I'll show you what supply and demand is. We're gonna be ending the show today as we have an unruly contestant. I didn't even get to answer a question. I really wanted to win the prize money today. I so badly wanted to win too. I needed the money to buy gas for my car as gas prices are so high. Yo man, can you give me a lift? On the next show guys, you'll get a chance to answer your questions. I gotta get out of here before the mania comes back. Where is he? Come back here, you fraud. Yeah man, I need my prize money. I forgot. Join us next time next week for another episode of Are You Money Smart? Hi guys, thanks for watching my video. Make sure to like, share and subscribe to my channel to see more of my videos. By now, you would have learned a thing or two about what it takes to own stocks from the responses of the contestants in this kid video. But you might be wondering, what is a stock? A stock is defined as a share of ownership of a company. That means if you own a company's stock, you actually own a percentage of the company, including its assets like shares, vehicles, buildings, and a percentage of its profits. It's important to note that there are more than one kind of stock ownership that companies sell to the public. There are two kinds of stocks, which are called common stocks and preferred stocks. A common stock is the kind that most investors buy. Owning a common stock generally gives you one right to vote at shareholder meetings. Common stockholders may also be entitled to receive distributions of what the company provides. This is called dividend payment. People invest in companies that they think will be profitable with the hope that the company will start paying out its profits to its shareholders in the form of dividends. On the other hand, a preferred stock generally doesn't have voting rights and you generally will not find them trading on the stock exchange. However, preferred stock shares have the benefit of preference when it comes to dividend payments. For example, if a company decides it's going to pay dividends, preferred stockholders may get a bigger share and be paid for common stockholders. Preferred stockholders are also entitled to be paid first if a company goes bankrupt or the assets are sold. Regarding buying up common stocks of a company and controlling the business, such as what Elon Musk did when he bought Twitter, he had initially bought 9.2% of Twitter stocks, which made him the highest shareholder of the company, but the Twitter board of directors quickly filed with the SEC to adopt limited duration shareholder rights plan, often called poison pill. This was a day after Elon Musk offered to buy the company for $43 billion. Now, even though the Twitter board had adopted the poison pill to fend off Elon Musk's potential hostile take, it still didn't work as he was able to convince the board that they had the company's best interest at heart. Now, the deal to buy Twitter by Elon Musk is a little bit complex, but I'll attempt to explain it in a way that would make sense to you. First, he was able to secure funding from Morgan Stanley, $25.5 billion to get the deal done. This was literally a loan he got from the bank, and you can only do such deals if you're super rich. Number 2, only recently, Elon Musk sold $12.5 billion in Tesla stocks over a span of 3 days after the loan deal he got from the bank. Number 3, it was also reported from looking up the SEC filing that he had secured about $7.1 billion financed from investors such as Binance, Brookfield, Fidelity Management and Research, Lawrence J. Ellison Revocable Trust, and Qatar Holdings to seal the deal worth $44 billion to take ownership of Twitter. Alright guys, as we wrap up this video, it's important to research the companies of the stocks you want to purchase in order not to buy shares of those companies that are not profitable. Now, depending on your financial goals, you too can become a significant shareholder in the company by frequently buying up company shares on a weekly basis, bi-weekly basis, or monthly basis. And the great thing about buying up a company share is that you actually can buy a fraction of a company's share. It only takes for you to be aggressive with your money. Now, disclaimer here, I'm not a financial advisor, but I've invested in the stock market for over a long period of time now. What I'm saying to you and the advice I give to you is based on my own personal opinion. I advise that you apply the 50-30-20 rule when it comes to budgeting your income in order to achieve your financial dreams through investing in the stock market. Also, I'm aware that the Nasdaq, S&P 500 and the stock market are not performing well this period, but you have to understand that it's the nature of the stock market and only those who are investing for the long haul, regardless of what is happening in the market, will. In another video, video, I'll show you how you can make the same amount of interest banks make when it comes to investing in insurance. In this case, I'm talking about life insurance. Also, make sure to watch my video on the history of the stock market located on the bottom of the screen. As always guys, I'll leave you with a quote from John D. Rockefeller, who was an American businessman and philanthropist. He has been widely considered the richest American of all time and the richest person in modern history. He said, "The impression was gaining ground with me that it was a good thing to let the money be my slave and not make myself a slave to money." Guys,